Okay, we're in the fourth installment of the top 5 trades of Mori the Millionaire, covering his most successful trades to see what we can learn from them. We're using this on-demand function that's built into Thinkorswim from TD Ameritrade to go back in time and try to find these trades. We're using forensic science to figure this out. We're going to prove whether or not these trades are real, because we're going to go back and find those trades. And then once we find those trades, we want to look around and see what's going on at the time he's going in and the time he's going out. What can we learn from this? There must be something we can take away, right? So we got 3 videos already done, so go back and watch those if you haven't already. It's under the playlist. And then we have this one and then one other one. So let's get going. Okay, this is Mori 226's top 10 list of I want to be a millionaire. Rule number 1, keep 50% of your cash dry. Don't overinvest in the market. Rule number 2, don't put more than 25% of your capital in any one stock. Any big stock like an Amazon, you limit it to 25% of your total capital. Rule number 3, you buy options, you don't sell options. 10 to 15% out of the money in 1 to 2 months to expiry is perfect. Rule number 4, the Greeks, don't overpay for options. If the implied volatility percentile is over 80%, you're paying too much. Rule number 5, let the winners run. Don't take profits too quick. You need to make multiples of your losers to end up being profitable by the end of the year. And rule number 6, cut your losses early. Don't sit on your losers. Rule number 7, the trend is your friend. Stop trying to pick the top. If the market's going up, it's going up. Rule number 8, manage your emotions. Just focus on the winners. Don't beat yourself up when you have a losing trade. Stay positive. That's how you're going to win long term. Rule number 9, you got to learn the Greeks if you're going to trade options. You got to know what theta, delta, and you got to know what implied volatility is. And how are you going to do that? Rule number 10 is you're going to watch Uncle Dan's top 100 options videos. That's how you're going to win. So the 4th trade he did was Disney stock. And he went in on March 5th, which is right about in here, okay? And so you guys know when this was. Okay, so the market had already started crashing. Here was the end of February. Okay, so we're coming down in here. March 5th is right here. So that stock has already dropped halfway. And then he goes back in and covers the position on March 23rd, which is not here, but here. I don't know if you remember this, but I had certain stocks that had bottomed, and I had taken Home Depot, I had taken profit on this day, but certain other stocks like Procter & Gamble didn't plunge as much. And so what happened was even though Home Depot dropped significantly on that day, some of these stocks actually came down on the 23rd. So there were 2 dips. Everyone thought there was only 1 dip on the 18th of March, but there was actually 2 dips in there. And so that is where he covered. So he actually picked pretty close to the bottom with that one and made 10 times on his trade. Now 10 times return on a trade is what I've discovered to be kind of the optimal number to use when investing in options. Because the probability of success is low in options, you need to try to make 10 times return on your investments in order to make yourself profitable by the end of the year. So really that's what your target, that's what your aspiration is. But options have an expiry date. If you get to your expiry date and you're not there, then you're dealing with a different kind of issue. So I'm not saying you'll always get 10 times, but you have to be aspirational in your goal. Your goal can't be, I want to make 50% return, and then half your trades you lose 100%. Or more than half your trades you lose 100%. So you want to be profitable by the end of the year. So let's go back and find this trade. He did 75 contracts. So we're going to click on demand, which is up in the top right hand corner. We're going to go back to March 5th. Here's March 5th. I'm going to put us right after the close, so it's going to be 4:50 p.m. The reason why I'm doing that is I want us to be able to look on a 1-minute chart and try to find his trade. soon as you click on demand, the first information that comes out are the charts. So here we can see what the chart looks like for the day. And then the option prices will come in a little bit later. So here we can see the day opened up around 117, traded down to 112, and then drifted back up a little bit on March 5th. Okay, so let's go in to the options and see if we can find his trade. Now the option he did was the April 17th expiry. First thing you'll notice, he's doing an option that has 43 days out to expiry. You notice that? So 43 days out, he's looking at Disney. Now the stock was down $5 on the day, and the strike that he did was the 100 strike. So the stock's at 114 and he picks a 100 strike. Okay, now with the TD platform, we can actually pull up the history of an option. So what we're doing is we're looking for his price that he traded, which is 2.356. So they add his commission in there. So I think we're looking for 2.35. So let's look across here and see if we can find 2.35. Okay, so this is 219 down here. Okay, so immediately we can tell there's no way he did anything down in here. In fact, it would appear that that option was trading for half that price in the morning. Okay, so the high was 280. We're looking for 235. And let's see, the volume was 200 here. The price there was a low of 237. So it's below this. And it's for 75 contracts. So we can ignore all the prices to the right because those were higher. So now we're zooming back into here. We're looking for 235. And this one is 230. Let's see, 235 high, but the volume's only 14. So this cannot be him. But this is the price we're looking for right here. So right here we're looking for volume of 75 contracts. There's 2 there. There's 1 there. There's 14 there. There's 49 here, but this is 231, so this isn't him. 11 there. Don't see him there. Let's see, what are these? These are too high. 202 traded here. Low is 237. Okay, so I'm looking for 235. Let's go back in time a little bit more. Maybe there was another drop before that. Okay, now here's 235. So let me zoom in a little bit more here. Okay, so now here's 235, but do we have the volume to confirm that this is his trade? I don't see the volume. I see 55 contracts, but that's at 241. So we're looking right here. 231, 49 contracts. 238, 234. I don't see it. And this one is trading at 211. 75 contracts on March 5th in Disney. Okay, maybe we need to go. Okay, now let's go back to the close and see if we can find something right on the close. Now here's, okay, so I think I found it. Right on the close, 135 contracts traded between 229 and 236. Okay, so that's the only one at the 235 price that has enough volume tied into it to be able to fit this profile. So he did 75 contracts, and here it is right on the close, 135 contracts traded. So we saw the price 235 earlier in the day, but none of them had enough volume to qualify as one of his trades. All right, so here we found it. It was right on the close. We can confirm that there was at least 75 contracts traded at 235, and this is in all likelihood his trade. Now on that day, we can look over here, and a lot of stocks were down that day. And so if we look at the market, look, the market was dropping, and clearly he made the decision to short the market, not before it dropped, but after it dropped. And then he took profits in there on March 23rd. So now we're going to hop to March 23rd. We're going to go back to a daily chart. So instead of looking at the stock, we're just going to go ahead and just look at the option first. Okay, so March 5th was right here. He bought it right on the close at 235 on March 5th. The next day, the market dropped. He went up. Volume was like 4,000 contracts. The next day, the volume in this 100 put was 25,000 contracts. Now what's interesting is as the days go by, he's up quite a bit of money. But you notice how he doesn't take profit? He doesn't take profit. He doesn't take profit. It's really hard to hang on to a winning position, especially when you're up 10 times or 5 times or 1 time. So here he is, and then on this day, March 18th, he could have sold it for 23, but he did not sell it on this day. He sold it on this day. So 3 days earlier, he could have sold it for more money. So now we're going to look for his sell order on March 23rd at a price of $20. So within 20 days, he's going to go in and sell it for $20. Now here we can see the high was 20. But 75 contracts is a big number. The volume there was 27 contracts, so that's not him. So we can't say that that was his trade. Now here's a trade. Okay, here we go. 77 contracts right here. Okay, I'm going to zoom in so it's easier to see. Right here, he did not get filled because I can only see 27 contracts, okay? So that's not him. But the next bar, 77 contracts traded at 20. So now that could have been his. Now here's some other ones that traded 20. High of 1980. Okay, now here's another one that traded 20. But that one only had 57 contracts, so that's not him. Here's a 200 contract order, but that one was at 19, not at 20. And then it never saw that rate again. So there we go. He actually filled that order at 9:39 in the morning on the 23rd. Put an offer in for 75 contracts and got filled at 20. So there you go. That's 1,000% return from March 5th to March 23rd. The total profit on that trade was $132,286.36 after commissions. So his original trade, he went in with $17,676 and then sold it for $149,945. Wow. That's an amazing trade. And that's just trade number 4. The other 3 that we've already recorded were even bigger winners. His top trade in Amazon was $379,000 profit. Now he went in with $301,000 and sold it for $680,000. His second top trade was NKLA, where he bought $79,000 over multiple trades and sold it for $300,000. His third trade was back in Amazon again, and that trade was investing $32,500 and taking out one and selling it for $187,000 and making $154,000 profit. So these are big numbers. What I would say to you is just appreciate how hard it is to hang on to trades like this when these numbers get that big. Very few people can do what Mori's doing here. Very few people can keep their hands in pockets and let that thing move up and down like he has done. You can see the low in this option was 3 cents back in February. So obviously a huge move in February and March, right? It's a huge move there. And so if we go back and look at the stock now, not the put option, you can see what happened with the stock. So it had plunged a couple days before. That's when we saw the option trading at almost 23, and then it came back down a little bit on the 23rd. Right, so you can see what the stock did there. Stock was trading at 140 in February and got down to 79. So great trade. Congrats, Mori, on that one. And we'll go ahead and get ready to do trade number 5, which is going to be with a company called FSLY, FSLY. That will be the 5th top trade as of today. Obviously, he's still trading, so there we go. Thanks.